This is Don DeBartolo, a senior commodity broker and market strategist with Daniels Trading, a division of StoneX in Chicago. I am also the trader behind the Trade Spotlight advisory service. Trade Spotlight is one advisory, but I have it broken up into three segments. I cover futures, commodity options, and future spreads. This is Beyond the Spotlight, a video that highlights 2 or 3 markets that may become trading opportunities for this week. This week begins the new year, January 3rd, 2022. Happy New Year. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. All right, let's jump right into our first chart for this year. This is March 2022, Japanese yen futures contract. What I have drawn off here is a potential double bottom formation. So you have the first ellipse where a low was made 86.71.5 on the 24th of November, so the day before the Thanksgiving holiday. And then this includes today's trading session, Monday the 3rd. A new low was made at 86.70.5. So we took out that previous low by 1 tick to create a new 12-month contract low. If we close above there, then this holds that double bottom. If we close below there, that triggers a high-low breakout setup. High-low breakout, we'd be selling. A double bottom, we'd be looking to buy. So today's close really matters. So I'll be watching closely to see how we finish today to determine if I need to place an order for tomorrow's trading session. Right now, looking at these moving averages, they're all down. As obvious as the last quarter of trading, market sold off and then was just sideways. But looking at these indicators down below, my trend is down, but it looks neutral. The first one is my MACD here. My second indicator is a stochastic. This is my momentum indicator. I'm showing a market that is oversold. And then the GB turning point indicator, this is hooking back up. This is a leading indicator. So I'm watching that closely to see if the indicators will hook up if this double bottom holds. Then we'll have a buying opportunity, perhaps on a break of these recent highs. We can draw a trend line from there. I'd also like to see these moving averages start to hook as well. So today's a big day for the Japanese yen. Let's see which way it closes, and then we'll determine the next step from there. Okay, the second chart is of the March 2022 sugar futures. And here's another chart where there's indecision. And that's typically the case of some of these commodities after this long holiday period. The Thanksgiving holiday in the U.S., you had the Christmas holiday where the markets were closed, New Year's around the world. So there's some bigger ranges, but potentially less trading volume in this time frame. And now we're moving into the new year. There should be more trading volume back into the market. We'll still get those big ranges, but there'd be more volume, more momentum behind them. That's what we're looking for early in this year, some nice momentum trades. And with the sugar, I have a pennant formation drawn off using the recent high of 2069 from the 18th of November down to this area around mid-December where we had touches on the trend line, and then at the end of December as well. Now the market is sitting closer to this lower trend line where really is only 2 points. I have the low of 1852 from the 20th of December and most recently the 30th of December last week at 1862. Looking for the market to break out in either direction, above the trend line or below the trend line. What's going for a potential buy in this market is the lower trend line may hold. There's a strong resistance level. You can see I have a red horizontal line drawn off. If we hold that trend line below that level, can be potential stop losses. And then my indicators, the trend is flat. Looking at the MACD, the stochastics indicator is showing a little bit more potential momentum to the downside, but that's starting to flatten out as well. And then my GB turning point indicator is right on the baseline there. So looking for that to bounce as well. Moving averages all pretty much flat in this area. So again, looking for this trend line to hold or these recent lows to hold. And then that would set up a buying opportunity on a close below that upper trend line. So that can come as early as this week. So let's keep the March sugar on your radar. Final chart I want to look at for today is of the February 22 live cattle, and this particular chart does provide us a direction. I have a 1, 2, 3 top formation. So the number one point is the 12-month contract high at 141.85 from November 29th. Market sold off to create a new number 2 point at 135.50. That was from December 20th. Then the market bounced off there, rallied, creating a number 3 point last week from the 29th of December, 141.42.5. It did not take out the number 1 point, so that 12-month contract stands. So we have a month-long 1, 2, 3 top formation. This is a trend reversal formation. If you take a look at the MACD indicator down below, it is starting to turn over along with my stochastics. Again, that's my momentum indicator, and the GB turning point indicator is crossing over that 50 mark. So I think this market is ready to sell. We had a nice sell-off here to start the year, but I'm going to set an order to sell on a break of today's low and that 20-day moving average. See if we can't ride this down lower towards the number 2 point, or even there's another potential target down below about the 133.5 level where there's some recent lows. Potential stop loss could go above today's session high and the recent contract highs, or if you're looking to take on a little bit more risk to be more conservative on your stop loss, you can go just above the number 3 point. Typically with a 1, 2, 3 formation, you are looking for a close below, a break of the number 2 point, but in this instance, I don't want to wait another about 400 points or so, a little bit less, 300 points or so, to wait to sell the contract. I like how this is setting up now. So this is a little more aggressive stance by selling on a break of yesterday's low, but I do like how my indicators are shaping up here, so I want to follow those. So I will send out a recommendation to sell the February 22 live cattle contract this afternoon, so stay tuned for that. This is what the email service looks like. So you get a Feb live cattle futures trade that'll have the write-up of the trade, a lot what I covered here today, the precise entry order, stop, and target. So you know the risk-reward parameters going into a trade. Feel free to tweak them to fit your trading style. Any important information is going to be there, like margin requirements, the futures expiration date, and then my chart that you can click to expand. If you're not following the Trade Spotlight, I encourage you to do so. Just head over to the Daniel's Trading webpage, and the tabs that run across the top, you'll find advisories. Click that one, and then under technical analysis, you'll find Trade Spotlight. You click it, read more, see recent posts, and subscribe. It's free cost to everyone. Here is all my contact information. If you have any questions about the charts I covered today, markets in general, open an account, you want to start trading in the 22 new year, feel free to reach out to me. Happy New Year and happy trading.